Hello everybody and welcome to Homeowners Cafe. This channel is going to be to educate any homeowner on their homeowners policy. Now, I decided to make this channel because I work in insurance and I've been in property insurance adjusting probably for about 7 to 8 years. Now, in my career, I have worked for big companies, I worked for small companies, but one of the things that every company has in common is that most insureds are extremely uneducated about their policies. Most people purchase a home, they get the homeowner's policy, and they literally never open it. So what I want to talk to you guys about today is basically the 4 main coverages that you will file a claim under if something was to happen to your home, the terminology and what those coverages entail. And then we'll go over how the claims process works. If you guys like this channel, make sure that you like it and subscribe it. And if you know any homeowners, please share this video with them because I care about y'all. Most homeowners assume that an insurance policy covers everything, and that's not always the case. So the first coverage that we're going to talk about is dwelling. Typically, your dwelling coverage is the biggest amount of coverage that you have on your policy. Let's say, for an example, your home is $500,000. Your dwelling limits will most likely be $500,000 or more if you wanted it to be $700,000 or something around that. You'll probably get your home appraised, or when you first get your homeowner's inspection before closing, they'll probably appraise your home at what it's worth, and that would be your limit. Now, what your dwelling limit means is you have up to that amount should something happen to destroy or damage your dwelling. You have up to that amount should something destroy your dwelling. Dwelling is going to be the main structure on the property where you live. Now, the second coverage we're going to talk about is other structures. Now, what other structures is anything on the covered property that is not attached to your dwelling. Example would be something like a fence, because the fence is on your property but is not attached to your house. If for some reason your fence is attached to your house, it will fall under your dwelling coverage. But in most cases, the fence goes under your other structures coverage. So that would be things like fences, in-ground pools, your shed, pergolas, things of that nature. Sometimes when you see your other structures coverage, that may be 10% of your dwelling maybe. You have a separate coverage amount for each type of item on the covered address. And then third, we have the contents coverage. Now, contents can be a little tricky. Contents is pretty much anything that if you move from your home, you're going to take it with you. Like clothes, shoes, portable fridge, CDs, DVDs, radios, computers, anything that if you were to take your house, turn it upside down and shake it, it would fall out. That is considered a content or a personal property, if you will. Now, when you're talking about personal property, most people think that any of those contents will fall under their contents coverage limit. That's not the case. You have to get certain contents what's called scheduled. Example, when you look under your contents coverage in your policy, there is sometimes a limit for jewelry, watches, and furs. Jewelry, watches, and furs coverage may only be $2,000. So what that means is if you have a wedding ring that you spent $50,000 on and it gets stolen, that's not going to fall under your contents coverage. It's going to fall under your jewelry, watches, and furs coverage. So what you would have to do is what they call schedule the particular jewelry or the particular content that you paid a higher cost for. For an example, that wedding ring that you spent $50,000 or $60,000 on, you would get it appraised, and then you would put that in your policy as an endorsement so that you would now have scheduled wedding ring that has $60,000 worth of coverage, and then we have the jewelry, watches, and furs that's worth per se $2,000. So you can schedule any type of content that you want by getting it appraised and then getting that put in your policy as a clause. I've had several insurers call because their wedding ring was lost or their wedding ring was stolen. They were only able to get $2,000 for it, even if they spent $50,000 or $60,000 for it, because they did not know that they needed to get it scheduled. So if you have a ring or a watch or a purse or a painting, get it scheduled. Unless you can give me the amount, a receipt that you actually paid and show me the proof of what you purchased it for. Most insurance adjusters, anywhere you go, they're going to give you the standard of whatever it is. That's why it's important to have things scheduled, because you want proof of when you purchased it, how much it is worth. All right, now the last coverage that we're going to talk about is ALE, additional living expenses. Now, this is when your insurance policy will pay you reasonable expenses for any additional living expenses that you may incur should you have to leave your property due to a loss that makes your home uninhabitable. Okay, now uninhabitable is not because it's a little hot in there. Uninhabitable is I don't have running water. I don't have lights. It's extremely hot. It's extremely cold. I'm sick. I can't live in here. It has to be what's considered uninhabitable by whoever your insurance company is. It has to be uninhabitable, and then the insurance will give you a certain amount of money to put you into another home while your home is being repaired or replaced or rebuilt or whatever the case. Additional living expenses will only pay what's additional to your normal standard of living. So let's say, for an example, normally you eat out 5 times a week and you spend $200 a week on meals out. Now, since a tornado has damaged your home, you have to go and stay in a hotel and use your additional living expense coverage. Now, since you're out of your house, instead of you spending $200 to eat out, now you're spending $400 to eat out. So what your insurance company would pay is the overlapping $200. They're going to give you everything additional to your normal standard of living. A lot of people get confused with this because on the initial contact, when there is first a loss, the insurance adjuster will ask you, how much money do you normally spend eating out? And then the person would say, let me tell them that I spend $1,000 so that I can spend $1,000 now. And then you tell them that you spend $1,000, but you actually only end up spending $600 and you're wanting your insurance company to pay it. But they're like, no, you already spent $1,000. So we don't owe you any additional living expenses. So if you normally pay $800 for rent, but now you're having to pay $700 in rent at an Airbnb and your $800 rent at your apartment, they're going to pay you the $700 rent at your hotel that you're at or your Airbnb that you're at while your home is being repaired. Just to recap, we went over the 4 main coverages that I see as an insurance adjuster on the daily. There are tons of other coverages that I will be going over as time goes on, but I mainly just wanted to introduce to you guys the main 4 coverages that I see. Now, the last thing I want to talk to you guys about is how the claims process typically works. What you want to do as soon as you have a loss, the moment that you see a loss, you want to immediately take photos of the damages. Once you take your photos, you call your insurance company and you tell them, hey, I have a tree, it fell on my house, I've taken photos. Now, what the insurance company is going to do is they're going to say, okay, we're going to schedule for someone to come out and inspect your home. Now, while you're waiting on someone to come and inspect your home, hopefully you've read your policy. So you have looked and you've seen, okay, I have $500,000 worth of dwelling coverage. So this tree is on my house. I know that since my tree has fell on my home, my insurance policy will pay me up to $500,000 for this tree falling on my home. However, without photos, there is no claim. If you cannot prove it, we cannot pay you. So you would need to take photos of the damages, and then as an insured, it is in your policy that it is your responsibility to do whatever you have to do to maintain your property from further imminent damages until an inspector can get out. Let's say, for an example, we tell you we can get an inspector out there. It's going to take him about 4 days. And then you may say, oh my, but it's going to rain. Okay, well, if you know it's going to rain and we're telling you we can't get anyone out there until 4 days, your responsibility is take those photos. If you have the money to get the tree off of your home, you have to go ahead and do what you have to do. Call someone out. They take the tree off of your home if you had the money. If you did not have the money, then you had someone to come out and place a tarp. Always keep your receipts so that you can give it to your insurance company. You've taken precautions to go ahead and what's called mitigate your damages. You're making sure that any photo that you can obtain, you're waiting on the inspector. Now, the inspector's going to come out. The inspector's going to take photos. They're going to ask you what happened. Now, the person that scheduled the inspection for you, they're going to ask you what happened as well. So you may have to explain what happened to about 3 different people. They take photos. They write an estimate for you. Once they write that estimate for you, they're going to send it to the person that's working on your estimate on the inside. And that person will most likely be the one that, calls you, or your inspector may call you and give you a payment, or there may be someone on the inside of the office. They may call you and tell you what your payment is. Whenever you file a claim, the estimates that you get are just that, estimations. They are estimating how much the damages may cost. Sometimes the damages may be more. Sometimes the damages may be less. But if those damages are indeed covered under your policy, and your insurance company gives you an estimate for, let's say, $5,000 to remove the tree and to fix your roof, and then your contractor comes out and he says, no, it's actually going to cost $7,000. That is fine. The only thing you have to do is take your contractor's estimate, give it to your insurance company, let them review it, and they will pay you the differences as so long as your policy has coverage for it. Okay? So, of course, there is tons of other things to discuss, because we have to talk about when trees and things like that may not be covered. We have to talk about the limits that are typically sometimes hidden in a policy when it comes to trees and removing debris from your property. But this is a subtle intro to you to let you know that you guys do need to read your policy. You need to be aware of dwelling, other structures, scheduling contents, additional living expense costs, and things of that nature, okay? And I also wanted to let you know how the claims process works. So hopefully this video was extremely helpful to you guys. I hope you learned something. If you did, let me know in the comments. If you guys have any questions that you would like for me to talk about on my next video, put those in the comments as well. Make sure you subscribe so that you can see me the next time I come on this platform. Thank you guys so much. Have a great day.